This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. US and Western officials are finalizing plans to impose a cap on Russian oil prices amid a warning from the World Bank that any plan will need active participation of emerging market economies to be effective. Officials said no price range has been decided yet. However, one person familiar with the process said the cap will be determined in line with the historical average of $63.64 a barrel, a level that could form a natural upper limit. Such a level is in line with recent comments by Treasury Secretary Janet Yellen that a price cap in the $60 range would give Russia an incentive to keep producing oil.
India's oil imports from the Middle East fell to a 19-month low in September while Russian imports rebounded, although refining outages hit overall crude imports, data from trade and shipping sources showed. Iraq remained the top supplier while Russia overtook Saudi Arabia as the second biggest after a gap of a month, the data showed. India's total oil imports in September fell to a 14-month low of 3.91 million barrels per day, BPD, down 5.6% from a year earlier, due to maintenance at refiners such as Reliance Industries and Indian Oil Corp., the data showed.
Moving on to the top news in the energy sector.
The drop in Russian fossil fuel exports after its Ukraine invasion this year will transform the global energy landscape for decades and can help to hasten a green energy transition, the International Energy Agency, IEA, said on Thursday. The IEA's annual World Energy Outlook acknowledges the economic hit from reduced supplies of Russian oil, natural gas and coal, but is keeping an environmental best-case scenario in which no investment in new fossil fuel projects is needed. The IEA's report said the global energy crisis is causing profound and long-lasting changes that could hasten the transition to a more sustainable and secure energy system.
US crude oil stockpiles rose in the most recent week, even as the volume of exports hit an all-time record, the Energy Information Administration said on Wednesday. Crude inventories rose by 2.6 million barrels in the week to October 21 to 439.9 million barrels, nearly triple H analysts' forecasts in a Reuters poll for a 1 million barrel rise. Crude exports surged to a weekly record of 5.1 million barrels per day, cutting net crude imports to just over 1 million barrel of oil per day, also a record. The United States has ramped up exports sharply in recent years since the Obama administration ended a 40-year ban in 2015.
Next, we have the top news in metal markets.
Copper and aluminium prices retreated on Thursday, weighed down by more coronavirus curbs in top metals consumer China, a firmer dollar and rising aluminium inventories. They paired losses, however, after traders bet on a slightly less hawkish path for US Federal Reserve rate hikes. 3-month copper on the London Metal Exchange slipped 0.6% to $7,745 a ton by 13:25 GMT after falling as low as $7,663 in earlier trading. LME copper climbed 3.6% on Wednesday.
Dalian and Singapore iron ore futures widened losses below a key support level of $90 per ton on Thursday, as slumping industrial profits and fresh COVID-19 lockdowns in top steel producer China weighed heavily on sentiment. The most traded January iron ore on China's Dalian Commodity Exchange ended daytime trade 4.1% lower at 643 yuan and 50 fen, $89.29, a ton, after touching its weakest since July 25 at 642 yuan and 50 fen. On the Singapore Exchange, benchmark November iron ore hit a contract low of $82.85 a ton, down 4.3%. We will now look at the top news in the agricultural sector. Russia on Thursday said that provisions of the Black Sea grain deal to ease Russian agricultural and fertilizer exports were not being met, and that Moscow was yet to make a decision on whether the agreement should be extended. Foreign Ministry spokeswoman Maria Zakharova told reporters that the West had not taken sufficient steps to ease sanctions on Russia's logistics, payments and insurance industries to facilitate Russia's exports. The deal, struck in July for 120 days, is set to expire in the second half of November.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.